I'm actually super excited for a couple of reasons today. Number one is the beautiful face that you see right beside me right now is none other than Mr. Bradley Cooper. Mr. Anthony Tabar himself. How you doing today, Anthony?
Good. I thought you were talking about yourself. I hear you say the beautiful brown guy all the time. So I thought you were going to introduce yourself.
Look, buddy, I didn't go there today. I didn't go there today. Usually, I know the viewers are wondering, where's the raspy voice that's usually with you? Your VP / chief of staff / all things Ms. Laura Stewart herself. She's not here with us today, and guest co-hosting with me is Mr. Anthony Tabar. Some of you know who he is because he's been on the podcast probably going back to a couple of seasons ago now, right, Anthony?
Yeah, I'd have to say, it's maybe a couple of years ago.
You came on
with Marlene.
Yeah. You spoke about what it takes to be a real estate agent. I think you guys spoke about the process of selling your home and your condo and all that.
Yeah, I at that time I was a couple years into my niche. I picked a niche of the real estate market and I just kind of went with it. And I spoke about the success that I had by zeroing in on.
You said niche. What do you mean? Like what was that? And what is that now?
Well, now I focus heavily on pre-construction condos.
Yeah. So helping investors.
Mostly investors. Yeah. Cause we sell at the platinum stage and unfortunately end users can't really move so fast sometimes. Yeah. So yeah, we typically work with investors who want to get in at the ground level, day one pricing, best choice of suites. And there's just a system to investing in pre-construction that if you master the system, your returns will be much better than anybody else who buys in the same building as you.
And look, and I think it's a very passive way to get started in investing in real estate, which is a perfect segue to the guest that we have today. And that's the second reason I'm super excited, because it's Mr. Austin Elljae himself. What's up, Austin?
Nothing much, guys. How about you?
Well, look, we're living the dream here in Toronto. Anthony has been with me and our team for coming up to 14 years, I think.
About that.
You're one of the OGs on the
One of the OGs, yeah.
You're one of the OGs here. But Austin, for our listeners and viewers, where do I start with this guy? Well, first and foremost, not in any particular order, but he's the founder of the Rise Network. For our viewers, you see the hat that he's waiting. I take it my swag, my Rise swag is in the mail somewhere, Austin. So I'm sure
I got to get you some.
Got it. Founder of, look, hands down, one of the best real estate networks around. I know it's based out of Toronto, Canada, but it's quickly becoming one of the continents and the world's fastest rising, no pun intended, real estate network. So he's the founder of that. He's the host of the Rise podcast. Is it called the Rise podcast? I don't want to get it wrong, Austin.
Yeah, it's called the Rise Real Estate Investing Podcast.
Rise Real Estate Investing podcast, host, co-host, and I guess co-host, because I think you have a co-host as well. Mm-hmm. Love the content you guys are putting out. And then I think most importantly for today's conversation, you're an investor, like, and not somebody who's like, you look very young, and we're going to talk about that. We're going to talk about your journey, but I mean, someone who went like all in on starting with investing into real estate. You have a very unique story. You have a really cool strategy that you implement and talk a lot about. You were featured in Toronto Life not too long ago. I think I just saw something on your social a couple of days ago. You were featured in UFT's articles or papers.
Correct.
Yeah. What was that all about there?
It was just UFT sends like a monthly magazine, and every now and then they'll feature some alumni. So they wanted to get, I guess, someone to talk about real estate. So I was on there for a quick article.
And it was funny because I was speaking to Anthony like literally 5 minutes before we went on air, and Anthony's like, "Hey, Jazz, what are we going to be talking to Austin about?" And I was like, "Well, Austin does a lot of wholesaling in real estate." What did you say to me?
I said, this industry never ceases to surprise me. 14 years in the business, and I'm learning something new today. So I'm excited actually to hear what you have to say.
Because you mentioned you're like, I've never heard of wholesaling before, right?
It's a fantastic concept. You just introduced me to it, and I was like, you must have balls of steel. And I can't wait to hear it from your perspective.
Well, let's get started there. What the heck is wholesaling real estate? What is that all about, Austin?
Yeah, so wholesaling real estate. So I guess I'll talk a bit about assigning condos because it's parallels to assigning condos and wholesaling real estate, right? So when you assign a condo, you buy it, let's say 4 or 5 years ago, and then you assign it for a profit, but you're not charging the end consumer full market value, right? Because they have to bring a lot of money in the deposit and they got to pay you out your profits, right? So you, let's say, make 100K and the end user or investor who buys that assignment from you makes 100K because they're buying at 100K under market value. Wholesaling is no different, but it's in the resale market, right? So what we try to do is we try to go to sellers who are selling their property off the market just because it doesn't make sense for them to list it on the market. So some people are in situations where they need to close in 3 weeks. So I had a seller that I'm working with right now who wants to close in a week and a half, and you just can't realistically list that on the MLS because you got to get an agent to go in.
Hang on 1 second, Austin.
Yep.
1 second. So when you say the seller is closing on a home, so they bought a home, like, what do you mean by that they're closing on a home? Because I really want to walk all of our viewers and listeners. And the guy beside me, this guy does close to 100 real estate deals a year on his own. Like he has a mini team himself within our REC team, and he doesn't even know what the heck wholesaling is, right? And no offense to you, Tabar, but I mean, there's millions of people that don't know this.
Look, like, it makes sense to me, the assignment, when you have the 4 to 5 year span, that's the time in the market. But you're talking about a week and a half closing. Like, please continue. I'm all ears.
Yeah. So in these situations, the seller is in a dire. It's usually like a make or break situation, right? So by closing, I mean the seller needs to sell the property and have that property close in a week and a half or maybe
because
2
they
weeks.
bought something else. Because they bought something else.
It could be any reason. Like sometimes it's a foreclosure, which doesn't happen often in Canada, but it does happen from time to time. Sometimes their properties are just so distressed that they're not confident in listing it on the MLS because your family and your friends are all going to see the condition of the house that you live in, right? And they're just sometimes don't want people to go for walkthroughs. There's like tons of reasons that we get from time to time. And those type of sellers are the ones that we work with because listing on the MLS might not always be the right decision for them. So we reach out to these sellers via different marketing campaigns. It could be digital. It could be letters, like actual handwritten letters, which is very common nowadays. I don't know if you guys seen that in your personal properties.
Oh, yeah. I get like one a week.
Yeah. Well, it's a great marketing term because you know that
we already have buyers.
We already have buyers, and it look. I mean, it's definitely eye catching, and at the end of the day, that's the purpose of marketing. So continue though.
Yeah, exactly. Like for people who are not in dire situations, they'll see that as like, why would I call these people? But we're not trying to target these people, right? So they kind of filter themselves out automatically. But so essentially, we connect with these sellers and try to create like a win-win solution. We get these deals under contract, and then we have like a cash buyer list of 4,000 or 5,000 investors, and we send it out to our cash buyers list saying like, here are the details of the property, here's what we think it's worth, the renovations that are needed, the profit margin that you might make taking on this deal, and this is our assignment fee on this deal, but you need to be able to close on this thing relatively soon, right? And that's the entire concept of wholesaling. It's not always a week and a half, 2 weeks closing. Sometimes it's even a month or 2 months. It just varies. It depends on each person's situation.
I got stressed out just hearing a week and a half. Like now I understand a little bit more. You charge a fee for the assignment, but I guess obviously if you have more time, if you can negotiate a longer closing, then you can actually add some profit in there yourself. Do you guys ever take any profit yourself, or is it just a fee that is your source of income?
No, it's like an assignment to condos. You take profits, not fees. So for example, I'll give you a real life example of a deal we just did. We got a 9-plex under contract for 175K. We tell the buyer like straight. Not in Toronto.
Obviously not. No. But because I have a parking spot available for sale for 100 and something thousand in Toronto. So we all know, we're all from Toronto, including yourself. So we know that. Where the heck is this 9-plex? And if you're okay to talk about it, because if it's under contract, I take it that you're okay to speak about it because you're not worried about it. Okay. So where is this property? Like in what area?
So this property is in Kirkland Lake, so it's up north. It's very far off, about 5 or 6 hours. Very small city, mostly known for mining. So property prices there are they're much more cheaper than what you'll see anywhere within the vicinity of the GTA. But even then, 175K for 9-unit is extraordinarily cheap in any standard, like even in US standards where US property prices are so cheap. So we ended up getting that 9-unit for 175K, and we always bluntly tell the seller, look, like you're always going to make more money on the MLS. Like, is there any other alternative that you have, or do you really need to sell to us, right? And this individual, so like this property has problems of its own. There's a grow up there, and there's a lot of headaches. This person just wants out, right? So we're like, okay, fine, fair enough. If you understand that you're not going to get top dollar and you're okay with that, then we can move forward. They were okay with it, so we moved forward, locked it up under contract, took that contract and assigned it to another investor without giving like particular numbers, but the assignment fee was a little over 6 figures. And that was in the span of about 2.5 to 3 weeks where we turned around a 6-figure profit. But the as is value is about 150,000 more than what the investor bought it for. So there was still meat on the bone for them as well. That's like a very extreme concept though, like a very extreme example.
Yeah, but I'm sure things like that come up, right? And I don't mind sometimes speaking at the extremes as well, because then we can get a better idea of what's possible. So if I did some quick math there's approximately $50,000 left on the bone, the meat on the bone for.
Oh no, there was 150 grand meat on the bone for the investor. And for while we still made
But then, how much would need to be put into renos though?
Yes. So the reno is probably about 150, but that adds an extra lift to the property.
Got it.
Like we're talking all as is value when we state things.
As is.
Okay. Perfect. And now, so what would be the next step of the new investor that's picking that up? Go in, do the renovations, go back and do a refi?
Exactly. Yeah. So we're personally not closing these things. We get the we get the agreement to purchase and sale signed. So we might make $1,000 deposit to the seller. Then we take that purchase and sales agreement and we assign that to an investor, right? Then the investor has to close on it. They have to get either private lending or close on it in cash for the most part, because these properties are not going to qualify for A lenders a lot of the time. Right. And once they end up closing on this thing, then it's pretty much like whatever strategy they want to do. If they want to turn around the units, renovate it, then refinance it. If they want to flip it, we have flippers as well. We have what's called wholesalers, where a property is in decent condition. So someone will close on it and list it on the MLS without any renos and still collect like a small 20, 30K spread, right? But the entire concept or idea of wholesaling is buying things under market value, assigning it to an investor, leaving meat on the bone, and allowing them to explore whatever investment strategies they want, whether that be burring, flipping, wholetailing, whatever the case is.
Now, as realtors, obviously, I mean, we're contract people as well. Like, we like to know what conditions are going in and stuff like that. So when you pick up this property for $175, let's just use this 9-unit as an example. What type of conditions are you putting in there, Austin? Like, are you putting in that you have to have the right to assign? Like, what kind of clauses and or conditions are you putting in?
Yeah, I would say the the 3 most important clauses is 1, the right to walkthroughs. And it's usually just like 2 or 3 walkthroughs. And the reason being is because sometimes if a property is in complete disrepair, someone's not going to feel confident buying it sight unseen. What if there's foundation issues? What if there's like, they want a budget for renos? They need to send someone in there. So we try to get 2 or 3 walkthroughs, but we minimize the amount of walkthroughs, maybe 5 investors maximum to go in who we feel are good buyers instead of sending 20 or 30 people in. The second assignment that we put, it's not second assignment, the second clause that we put in there is a right to assign, and a right to assign where after we assign it, we are released of liability, right? And the liability falls on the shoulder of the person that we assigned it to. So someone is still going to be responsible if it doesn't close, but it's just not us as the wholesaler. It's going to be whoever buys the end product, right? And that just helps us from the legal perspective. We try our best to vet the buyer. Again, we deal with cash buyers as much as possible, but from time to time, for whatever reason, sometimes buyers, they run into a situation or they get cold feet and they want to back out, right? And they need to be held legally responsible for that decision. So we have that assignment in there. Not assignment. I keep on mixing it up. I keep on talking about assignments.
You mean the clause? Yeah.
Yeah. And the third one is it's an inspection clause or some sort of exit clause, right? Because in the case where we're unable to assign it, we would like to close on it if it fits our criteria, but sometimes it doesn't fit our criteria as well, right? Like some investors are taking on flips that cost $200,000. I personally can't do a flip that costs $200,000. So if I can't offload it to an investor, I need to find a way to be able to escape the deal. But we are, again, transparent to the sellers. Okay, look, there's going to be a clause that's about week long. We're going to shop it to our investors, right? If there are no investors who are willing to take action on this, very likely that means that the product is still a bit pricier and it needs to come down in value. But in that case, it might, like, we can try to give it to a realtor and they can try to find a pocket listing. So it's still not listed on the MLS. They can shop it to their own investors. Like, we try to find an alternative solution for them. But those are our 3 clauses that we include in all of our offers.
Now, what areas are you personally, for a lack of a better word, bullish on right now? Because obviously there's not much. I mean, sitting at the time of this recording, we're in end of May 2021, Toronto, GTA, tough, not impossible, but very, very tough to find something under market value. So where is Austin looking right now? I mean, you mentioned the Kirklands, and like, how far out are you going?
Mm-hmm. So is this in regards to the investing, buy and hold side, or just wholesaling side?
I think let's stick with the wholesale side, and then we definitely can transition into buy and hold. I mean, personally, I think buy and hold, I'm very bullish in Toronto. Call me biased. Like, I don't even hide the fact I am biased. Like, I'm born and raised in Toronto and GTA. I love this place.
And that's what we're more used to.
And I think buying and holding, I mean, there's 100 years of data that show why the GTA is a great place to buy and hold, even with pricing at where it is today, because I think it's just going to keep on going upwards. But specifically the wholesaling, Austin, like, where are you finding some gems and some diamonds in the rough?
So definitely we wholesale all across Ontario, and that includes in GTA. GTA is much harder, as you stated. Like, for the most part, most people are just not motivated to sell. They'll just list on the MLS. Fair enough. It makes sense, right? But we go all across Ontario. We find that Northern Ontario, you generally get the most amount of leads. That's where there's fairly more distressed sellers, probably because the economy is just not as diverse there, right?
Yeah.
We've gone east, west. Like, there's not really any particular area where we won't wholesale, as long as the deal makes sense. So, for example, like, we've wholesaled in Toronto recently. We got a deal in Etobicoke, detached house, and it had, like, the basement. The basement was about 7 feet tall in ceiling height, so you can make it like another unit. And we got it under contract for $900,000, and the appraised value as is, and it still needed work. The appraised as is value was about $1 million. And there was still room for lift, right? But the issue is in Toronto, again, the cost per lead is so expensive. It took us $25K and like 3 or 4 months and 25G. So that's like $5K every single month until we finally got a deal. And
that's the 5Gs, and that's the 5Gs that you spend on the marketing, you mean? Right?
Yeah.
Like all the got it.
And this was just to get this one deal. And it hurt. It hurt our pockets because we're just like, should we just give up now? Because we're not getting any deals. And then this one came in, right? So it's tough to wholesale in Toronto for sure. But we're finding the most success probably Southwestern Ontario and Northern Ontario.
Well, I mean, I love the fact that you and thanks for sharing like what it cost you, because anybody who's watching or listening, I mean, you can go on a bunch of people's Instagram profiles and they'll tell you that they're wholesalers. But if you're not, in my opinion, listening or watching someone like Austin and his community, I think you might get burnt, right? So be very, very careful. And we're definitely going to go into everything that Rise is doing. Now, just speaking, I want to let me first ask, because I want to make sure that Anthony, did Austin's explanation of wholesaling and all that, did you kind of get it? Or did you
fantastic.
Want to go deeper,
I mean, look, people will ask me, hey, what will a semi-detached in Vaughan cost me? I don't keep my eye on every single neighborhood in the Toronto Real Estate Board. So I would still need to, consult the MLS system Stratus. But for you to tell me that you're sourcing these properties 5 to 6 hours away and like all over the province is like, how do you
get the information on the solds and stuff?
Yeah.
That's a great question, man. Yeah. How does that work, Austin? Like, I was obviously, I mean, you're here in Toronto. You live in Toronto still, right?
Yeah, I live in Toronto.
Okay.
We do a virtual wholesaling model. So yeah, that's actually a very good question. Kind of what we've been doing is that we've been partnering with realtors that are further away and this kind of ties into the Rise community that you mentioned before, Jazz. A lot of people in the Rise community are newer investors, so they can't afford the GTA necessarily. Of course, there's some investors who can, but they're looking out further away. So we connect with these realtor partners and say, hey, look, like, if you help us pull comparable data and your particular city, then in exchange, we can add value by giving you a platform to share what you know about investing in your particular city. Like, what are rents, what are purchase prices in each particular pocket and each neighborhood, right? So it gives them a platform to establish credibility among our audience. So we have kind of a mutual value exchange, and these realtors help us pull comparable data. And it's just a matter of picking up the phone. And I do this quite frequently. It's just cold calling, right? Like, it's no secret to it. It's cold calling, getting rejected a couple of times, and then just finding that one realtor who's willing to partner with you and then see the long-term relationship, because not every person in Rise is going to buy with that realtor right away. It takes some time, right? But they still need to pull comps from me in the meantime.
Anthony and I know a lot about cold calling. When we started in our careers, we used to order some pizza at 7:30, 8 o'clock and just cold call people to see if they wanted to buy or sell a home. So we get it, and kudos to you.
Yeah, man, that's the sweat equity. That's obviously it's paying off. That's good for you. Now, I have a question about the original sellers. When they see the sold price that you get for it, do they ever like have seller's remorse or like give you a hard time or like regret?
Yeah, so that's a good question. So how we present the situation when I speak to them is like, hey, look, when you're selling to me, realize that I work with fix and flippers and investment partners, and we want to turn a profit. Like, we're not here for charity. I can't sustain businesses and buy houses if it's not turning a profit. So that's right amazing. Off the bat, they know right away my intention is to cut a profit. Right. And if they're not okay with that, I tell them you got to listen on the MLS, or you're really just like not out of options. So
I love that.
Like they need to be aware of that right off at the bat. They are not aware of the exact assignment fee. And I do agree that if sellers find out the exact assignment fee of every deal, it could be a cause for contention, right?
Sure.
But I'm very transparent in the fact that I'm not going to offer top dollar. And if your property is in more disrepair, then it's definitely not going to get close to top dollar, right? They just need to be okay with that fact. And I think that the actual sale price that we have is a bit it's more negligible, because I let them tell me what they want first, right? And then sometimes I'll even go higher than what they're looking for if the numbers still work out on my end. But we don't disclose the assignment fees to the seller, nor does any wholesaler really disclose the assignment fee to the seller. But in terms of honesty, you just need to let the seller know, like, you're going to cut a profit out of this, right? But you don't need to tell them what profit you're cutting out of it.
And look, I think it's somewhat similar. Not 100%, but definitely somewhat similar, because I was just on a call before the podcast with somebody who wants to assign a condo, Anthony, and you're going to be speaking to them very soon, okay? They want to assign a condo that they bought 2 years ago. Occupancy date pushed out. It's in Etobicoke, actually, right off of 427 in Burnenthorpe. Mm-hmm. And I was talking to them, and I said, look, as an assign, because they were wondering what the process is like. And I said, yeah, there's going to be market value, and we'll kind of give you an idea what that's going to be, but we do need to leave some money on the table for the new investor. Otherwise, why would the new investor, the assignee, be incentivized to pick up your place? They're going to have to do all the closing costs. They're going to pay the land transfer. They got to pay the HST, especially when we're talking about new builds, right? And so people are definitely used to it, the theory, and they understand it. Not everyone. And look, I think if someone just doesn't get it, someone and I think what you guys do really well, Austin, is let the seller not sell with you guys and say, look, just put it out on the open market and see what happens, right?
Well, anybody assigning a condo this year who bought 3-4 years ago, you could have bought anything 3-4 years ago and you would have made a profit. So we just have to, I guess, manage their expectations and say, look, you can make 25% per year, or you can make 22% per year and sell sooner than you would if you sold for market value,
and possibly with less headache, right? I mean, we're brokers. Mm-hmm. We understand that. Like, we definitely think that it's a lot easier to work with real estate agents. But I tell clients all the time. I mean, I always pull out this book that we wrote. I mean, there's a full chapter dedicated to selling your own home. We teach people to sell your home. You don't need a real estate agent. We advise one because it's going to make life easier and there's less risk, but it's going to cost money. And so to that fact, I don't think that I don't think what you're doing is wrong by any means. I actually think that as long as you're telling people and being transparent, you're doing a great job.
That's
and
the key
exact.
word.
Oh,
Yeah, that's
sorry.
the
I was
key
going to
word.
say that.
Transparency. Transparency is the key word. Like that's something that you're managing their expectations from the get go, and it's something that a lot of salespeople. It's a really a good tool to have in your toolbox.
Absolutely. And to add on to that, sometimes the reason I guess why are you looking to sell? They're like, oh, with us, and they say we want to save on realtor fees. I was like, look, I understand the concept of saving on realtor fees, but a realtor is going to get you so much more money on the open market than you can get yourself. And that's just the fact. That's the reality of it. In today's market.
In today's market, we know that, right? But that's not in every single market. In fact, it's also not, it might not be true in the Kirklands of Northern Ontario, right? Like in certain provinces. So I love your guys' concept, what you're trying to do and what you guys have been doing really well with. Now, this is not what you started with, I believe, Austin. I mean, you and I have done a lot of pieces of content before you came on my nightcap that I was doing every night live on Instagram. And if I remember properly, you bought a condo here in Toronto. That was your first step into investing in real estate. Correct me if I'm wrong.
No, the condo was actually a bit further in my journey, but that was my first step into the GTA investing, I guess. Yeah.
So what was the first, like, how did you get started with investing in real estate?
Yeah, so I got started investing with about 40. I had about 45 grand after graduating university. And a lot of that came from frugality, saving like every penny I had, working, summer internships,
That's great,
co-op, all of that stuff. And so I had about 45 grand saved up after paying my debt out. And I spent about 5,000 or so trying to like play with the stock market, but I was very emotional and tried to swing trade, and that didn't turn out well for me. So I lost about 5K in wheat stocks and had about 40 grand left, started my full-time job at a big 5 bank, and told myself I didn't want to be working the 9 to 5 forever. It just wasn't like a corporate lifestyle, just wasn't my passion. I just couldn't see myself doing that forever. So I needed a means to escape and build financial freedom. But I only had $40,000, and I found real estate investing, couldn't afford anything in the GTA, but still wanted to get started. And I ran across Windsor, where property prices were very cheap there. And I know it's cheap for a reason, but I needed a way to get in the market. And I knew.
What year was that?
This was in 20. This is 2018, around September 2018.
So not too long ago, 3 years ago. Okay, cool.
Yeah. Exactly, about 3 years ago. So that's when I started my full-time job, and I ran across Windsor, and I made every mistake you can make in the book. So I contacted like an agent that listed the property without researching any other agent. Says, hey, I'm interested in this property. She's like, it's sold, but come down here and I'll show you other properties. And I did like zero due diligence. This is the first agent I called. I was like, okay, cool, I'll come down and meet you. Went down, she showed me 4 or 5 properties, and she's like, all right, which one do you want? I'm like, what do you mean, which one do I want? She's like, oh yeah, like, are you gonna buy one? And I'm like, okay, give me a day to think about it. And I didn't know how the process worked. I just thought, like, okay, maybe I am supposed to buy one. So I just chose the cheapest one, the one that was $130K for a single family house detached, because that was the only one I could afford, right? The other ones were like higher hundreds, and I didn't have the money for that. So I ended up buying that property, and I ended up working with a terrible contractor on that property as well. And everything went wrong in that property. But fortunately, the market appreciated it, and I was able to refinance the money out.
I love what you just said, that fortunately the market appreciated, because what I like to say is that real estate is probably the most forgiving investment that you can make, as long as you don't sell. If you hold on, you'll generally win, right? A good friend of myself and my partner is Scott McGilvery, and he always says that it's not about trying to time the market, it's about the time that you put in to the market, right? As long as you hold on. So you go to Windsor, you buy this property, contractor screws you. Give me the ones and twos, like on how that happened, like what happened with the contractor. So you try to keep other people away from that.
So I didn't know anyone in that market. I didn't build a power team, and I'm sure you guys always talk about having like a strong power team. And generally, your realtor should have the strong power team for you if you're working with a good realtor, which
especially
I was not.
If you're working with an investor savvy realtor. Sorry to cut you off, right? I think that's very important.
And I wasn't. So nothing was set up for me. And I just asked, I think I just like asked around people like randomly who's a good contractor. And I just found a random contractor. He said it was going to cost about $10,000 to fix the house up. Ended up costing more than double that. Said it was going to take a month to renovate. Ended up taking longer than that. So holding costs also went up. And obviously I only had 40,000, so that wasn't enough. So I had to ask my girlfriend for money, who's also like just graduated university. So that's obviously, she doesn't have a lot. And I have to ask my parents for money, and both my parents work in warehouses, so they don't have a lot of money. So it was a tough ask, right? But my back was against the wall. Again, as Jazz said, real estate's a forgiving asset. So fortunately, the market did appreciate. There's definitely luck involved because it appreciated quickly in a short period of time, like that quick burst. So I refinanced all the money out. Plus, the tenant that moved in gave me 1 year rent up front. That's sketchy. I don't know why. I didn't ask, right? In retrospect, that would raise red flags now. But shit, like it was a lot of money. So I was like, okay, I'll take it.
Well,
So
especially if you're a tenant and I'm hearing all these stories of tenants not paying rent. You're giving me 1 year up front. Yeah, I'm good. Let's go.
Yeah, exactly. Like I didn't question. I was like, this is sick. Okay. So I took all of that money, got my refinance money. And then this time I spent a lot of time networking with people and building that power team, connecting with investor savvy realtors in the Windsor region, contractors, real estate investors, and gave it a second shot. And that second time it went well, and I refinanced all my money out on my second deal.
Tax-free.
Tax-free or tax deferred. Tax deferred.
Well, tax deferred. Yeah. I like to look like, I mean, at the end of the day, you're not paying tax on that right now. I always like to mention that, right? Because I mean, it's one of the only legal ways to defer taxes when you do a refi. I like that you still held on to the property. You could have went to Vegas. You could have went to Niagara Falls and put it on black and red, but I have a feeling you're smarter than that, and you didn't do that. What did you do with that money?
Yeah, so as soon as that money came out, bought another property. It was a single family home, about 145K. We put in 17K in renos, and it appraised for 205, and pulled that money out. And then I started doing that again and again. So I buy these assets, I renovate them strategically, right? So like for every dollar I put in renovations, it needs to drive more than $1 in value of the property. If I put in $1 in renos and it's driving 80 cents, I'm losing 20 cents, right? So I'm strategically renovating the property, and then I refinance and rent it out. So I pull my money out, and then I rent it out to a tenant and collect that cash flow and just repeat the process again and again.
How old were you when you started? You and I have, as I mentioned, I know you're okay to share this kind of stuff. Yeah. So I know I'm not overstepping my boundaries. How old were you when you started?
I started when I was 23 with my first property.
That's just awesome. Anthony, like how cool is that to have, what did you say at the start of the podcast? He must have balls of steel or something.
Balls of steel. I don't remember where I was in 23 years old. I'll be honest with you. Complete transparency. Remember we said, yeah. So it's just, that's amazing, Austin. That's really good.
Right. I mean, to just jump in like that. And I know, and I'm so glad how deep you went into where the money came from. Cause there's one thing that I know people say when they hear about your story. Well, obviously his dad and mom gave him the money, right? And we know that not to be true. And so again, man, I mean, I say it every single time I talk to you is just kudos on taking that leap of faith and getting started. Now, you also mentioned networking with people in Windsor. Rise Network did not start at that time. You didn't have your own network. How did you start meeting people in and networking with them to build a power team?
Yeah, I think in every city there is always going to be investors there. It's just a matter of finding them, right? So fortunately in Windsor, it was easy enough as a Google search, like Windsor Real Estate Meetup, and I found it there. Or I'll go on meetup.com and I'll search Windsor Real Estate, find it there. Or I'll go on Facebook, Windsor Real Estate, find a networking group there. And I can do that with almost any city. If there's a city that doesn't have a networking group, what I would do, like if I was just thinking through it, as I will go on the MLS. Let's say I don't know anyone in this market. I'll go on the MLS. I will look for agents who maybe list multifamilies in Kirkland Lake. And I'll call that agent, say, hey, looking to get in. Is there any investors that, in your network that you can refer me to? And then I'll go that way, right? You just got to be creative. Sometimes you got to door knock and cold call people to get connected with investors. But for the most part, in this day and age, you can almost always find investors anywhere just by asking around or joining a networking group.
Have you ever been to any, like not business? I know you've been to entrepreneur and business and agent networking. events and conferences. Have you ever been to an investing one, Anthony?
Pre-COVID.
You have? So you actually went to like where there was other real estate investors?
Not just real estate. It was just more of like a career networking. So there was like mortgage brokers, insurance brokers, but not investors.
Real estate investors. Okay.
No.
And the reason I say this, and I'd love to get your take on it as well, Austin. So I've put on business networking events, not really career ones that Anthony's talking about, but for agents and contractors and mortgage brokers. I put one on for and been to hundreds of entrepreneurial ones. But there's one thing that is completely different when it comes to real estate investor meetups, that they share almost everything about their successes and failures. They are the most open book type of people to network with, and I love it. And I don't know why it is, but I've been trying to articulate why I think it is, and it's because we all kind of remember as investors our first property. Like Austin, when he was telling his story and you were saying your story on something, you could tell the pain you felt of that contractor screwing you, right? And so as investors, we all remember that first property that we don't want anyone else to go through it. Do you find that now, I mean, holding so many events, Austin, that like investors just share their stories openly? And I think it's just amazing, man, because we don't want to see other people get hurt.
Yeah, absolutely. We encourage in our group, Rise Network, for people to share both their wins and the losses and obstacles, right? Because we want people to be transparent, and we talk about transparency again and again, but it's so important because if you don't share your losses or the risk in real estate, not only like losses are the easiest way for other people to learn so they don't repeat the same mistake, right? So we try to encourage people just to be an open book. And I think with real estate investors, we all just want to see each other succeed because we all are on a mutual kind of mission or goal. We don't see each other as competitors really, but it's like, oh, we're all on the mission. For a lot of people, it's financial freedom. Maybe not everyone, but like it's just like camaraderie, if that makes sense, right? We're all trying to achieve that. So we all want to kind of help each other up. It's like, what's that? Tough Mudder, that race?
Yeah.
Oh, yeah.
Yeah. People are helping each other as much as it's kind of like a race. You see people like climbing up the like the mud walls, this and that, and there are people like holding each other's hands and pulling them up. As much as it's a race, everyone's there to support and help each other through because we're all on the same mission.
The pie is big enough for all of us to eat. It's an attitude of abundance, So
exactly.
It's definitely, it's really good. I just have a question about your refinancing. When you're buying the properties, you're buying them with the intention of improving them and refinancing. So you're getting like a 6-month term when you initially buy it. And then do you lock it in for a 5-year term because you plan on holding it?
Yeah. So what I end up doing actually is I initially get it lent on traditional financing, right? So like 3-year term, 4-year term, but I don't break the mortgage. I just top it off, right? I just go to the bank and say, hey, look, I'm not looking to break the mortgage with you. I just want to top it off at its new value. And then that's what I mean by refinance. I'm not actually breaking it.
You don't pay any penalties for it or any just pay the appraisal fee and the legals.
Exactly. Yeah, just appraisal and legals, which is about $1,000 or so.
I have another question. Has anybody ever approached you to like for a joint venture, and maybe like if you were like to scout the property for them and charge a fee and like kind of get them involved in this? Have you ever been approached?
Yeah, definitely. That's actually where I grew the bulk of my portfolio. So I think I'm at 24 properties now. And a vast majority of the acquisitions have been through joint ventures, exactly where you were saying, where people have the capital, but they might not necessarily have the time or the expertise or the resources because I invest kind of in further off markets, right? And then I am kind of the expert there. We buy the property together. They put up the capital. I renovate it, or not personally renovate. I manage renovations, refinancing, getting it leased out, so on and so forth. And then most of the time, a significant amount of the capital, if not all of it, is pulled out and returned to the investor. And then we just split the cash flow and equity pay down 50-50 going forward. But that's only after the investor gets paid out. More recently, I've actually stopped doing joint ventures, and I like to close things myself because I'm just thinking, to get the deal, I'm spending a lot of money because I was telling you guys my marketing costs, right? It's not cheap, and I don't pass those costs on when I JV with someone, right? It's like part of my like I guess benefit is bringing a deal. I'd rather just keep the deal myself. And if I have the team and know what I'm doing and I can raise the money privately, right, I can keep 100% of the pie. So that's what I've been doing nowadays.
Well, you said that it's $1,000 deposit to the original seller. I don't think you're going to need a joint venture on $1,000 deposit.
Yeah. Exactly. Yeah. So it just makes more financial sense for me now just to keep the assets, especially if I believe in it personally. Right.
Yeah. But I think for you to have scaled to the 24, I think you said properties, I mean, you needed to dip your toes into joint ventures, right? I mean, financing does become tougher. You're also helping other people, so I think that's great. And then I think it's actually fantastic that you became self-aware to say, look, man, I'm putting in all the work finding the deal. I got to find a G note as a deposit. Not that tough to do. I can close on these close on these properties myself. And you were going to say something. I cut you off, brother.
No, I just you don't need the joint. If you're like, when I was talking more about the wholesaling, not so much the buy and hold, but the wholesaling part of your business. I mean, like the rate of return is astronomical. So I mean, if an investor would pay you like a percentage of their profit, would you take on clients like that?
No. So we kept the wholesaling business nice and simple. We don't want to complicate the business model. Right now, it's just simply marketing. And I know it sounds like the rate of return is really high, but the work effort required is like also very high. And that's something I'm trying to get better at as well, because I'm working like literally morning till night. And my girlfriend will give me shit for it, because even my family will give me shit for it, because I just never, like, I'm always working, right? Which is not a good thing. So I'm hiring people to get the pieces in place. But
Anthony, hey, sorry, Austin, I'm not sure if you saw, but Anthony kind of just ducked his head because we get into trouble with us for the same reasons.
I got that Homer Simpson meme.
So,
to the weeds.
Yeah,
that's so funny.
The weeds, yeah.
Back into the laptop.
Yeah.
That's so funny.
Talking about all the stuff that you're up to, brother. Rise Network, the Rise Network community. How did that all get started? What is it about? And how do my viewers and listeners get involved?
Yeah. So, by the way, shout out to you, Jazz, and the entire Rec Canada team for hosting the first. Technically, it's the first ever guest speaker Rise Network event, because prior to that, we're just doing casual networking, and that was right before COVID. So,
I remember we had 60 people, 65 people in our office here. I mean, you Austin called me up and said, Jazz, man, I need a place to host an event. Would you be okay with it? And are you okay to come and speak to my investors about new build investing? I said, obviously, you want to bring 25, 30 people here? That's what he thought was coming. Ended up 65, 70 people.
And we had to cap it.
Yeah, we had to cap it because I was like, oh, it's going to get tight in here. I go, don't worry. I'll also bring some wine and some food here as well. You're going to bring that many people. I love hosting parties. So you're welcome. But at the end of the day, thank you for bringing that many people in front of me, my man.
Yeah, that was an awesome event. In terms of Rise, how it got started, originally, like I had 3 properties in July of 2019. I had about 3 or 4 properties at the time. And there were a lot of events that were out there, but I always found it nerve-wracking to go to these events, because there's a lot of experienced investor or an older audience, right? And I was a millennial, younger, so I couldn't relate as much. So I wanted to create an event where I was really catering to my people. And that it's obviously grown significantly since then, like it caters to everyone. But when I initially started it, it was like, I just want to just hang out with millennials who are looking to get started in investing and just talk about real estate. And we just met up at a bar in downtown Toronto. Surprisingly, 30 people showed up in the first one. And Matt McKeever actually came out. I know he was on your podcast recently, Jazz. That was awesome.
Big shout out to Matt McKeever. I love that guy. Great guy.
Awesome. He's awesome. Yeah. So Matt showed up to the event. And yeah, we're just talking all about real estate. And the second event, same thing, but word of mouth started to happen. And then 60 people came out to the second event. And I was like, oh wow, this is pretty crazy. And we just did like casual meetups. And then we just thought it'd have even more value by bringing in guest speakers. So Mandy Branham, shout out to Mandy. She was our first guest speaker, first and last guest speaker really in person, because the pandemic it came. But yeah, she talked all about raising capital and joint ventures, and it just grew organically. So really the purpose of it was just to get people together in a community and just chat about real estate. But slowly and organically, like as we started to add more and more value, just word of mouth happened. More people wanted to get together and share ideas, thoughts, and connect with other investors. And the community just grew from there.
What's the acronym for RISE again?
Real investor serving everyone. We don't really, we don't really say what the acronym is. We just call it RISE, but real investor serving everyone.
I love it because I mean, it's a word that can stand on its own, and it's rising and really rising other people in general. So I love it. And then you have, you know, the acronym, like it really fits perfectly. I was excited to get involved in any which way that I could, because at the end of the day, I really, really like you. From the first time that I met you, your energy, you're wanting to serve other people. You're not all about just yourself. You learned something, you hacked away at something, for lack of a better word, and then now you wanted to give it to other people, and that stuff just resonates with me at my core, where it's the reason that we did this podcast. It was like, I started this podcast, my cup is full. I got way more than I ever signed up for, and now it's my turn to give back. And that's why the Anthonys and the Austins are in my world. It's amazing. You look like you're itching to say something, and not at all. No, I'm never take anything away from you. No, Tabar,
it's you literally, Austin, you made something out of nothing, you know, and you from the ground up, right? It's really to turn $40,000 into what you've 24 properties, like that's astounding, man. You've definitely risen.
What would you I like that. that.
Gotcha.
what is a couple of tips, my man, that you can leave our viewers and listeners with to go from 45,000, well, really 40, because you spent 5 in the stock market, into 24 properties?
So first thing is that you want to surround yourself with investors who are doing things that you want to achieve or are on the same journey as you. Otherwise, like I wouldn't have gotten far if I didn't start networking, because I would have been a lone wolf. I made every mistake in the book, and I would have given up hope, right? At a certain point, it's like, forget it. It's not for me. So surround yourself with other people who are in this industry, who know what they're doing, and who are there to inspire and motivate you. And I know there are a lot of courses and stuff out there right now. But I think just the most important part out of just taking courses is just surrounding yourself with people. That's number one. Number two is that if you want to break into the real estate market, there's a ton of ways to do it. You can partner with someone to break in a more expensive market. So if you have 40, someone else has maybe 50, 60, but you want to do all the active work, you might be able to move, I'm not going to say in the GTA, but maybe to like Welland or Niagara municipality on that budget. If you want to do it yourself on 40K, you got to just find a market that you can make things happen within 40K, right? Like my goal is eventually to slowly creep closer towards the GTA, because I do agree with you. I think GTA has the strongest fundamentals, and it's going to be here for a long time, right? But for me to make that happen, I need to be able to build my wealth in some other way. So I'm starting with these outskirts cities, right? With someone with 40,000, just try to find a city you can invest in, something that cash flows, something that you can burr, something that you can really scale in. And then as you sell your properties off or whatever you decide to do, you can start slowly moving towards the GTA. Or if you want to stay in those outskirts city, that's totally fine too. But find something that you can afford and operate there.
I love that, buddy. I mean, you hit all the points that I talk about, even the JVing, right? I speak to younger people all the time through the Instagrams of the world. And guys and gals, if you're not following Austin, it's Austin Elljae on Instagram, by the way, right, Austin? I just want to make sure.
Yeah, Austin Elljae 6.
Awesome. Make sure you're following him. Just love the content, and make sure you're also following him on LinkedIn. He writes like these long form articles. I love you, Austin. I'm just not a long reader myself. That's not how I consume
not your fault.
Content. Okay, I'm just being honest.
Yeah.
But I know how much engagement that you get. So that, who cares if Jazz doesn't read it? Who gives a crap? At the end of the day, I know others are liking it and definitely getting a lot of value. So make sure you follow Austin there. But as I was mentioning, when I speak to younger people, I mean, people say, look, I can't get into real estate. I don't have a down payment and I only have $30,000. And I'm like, whoa. Hang on. You have $30,000. You need $100,000. Well, that's only like, just go find a couple of more people that have $30,000 each. Go find one person that has $70,000, or go find 10 more people that has $77,000. Like, you don't, like, I think people overthink it too much. Yes, you're going to be one of 10 people that own the property, but don't tell me that you can't get started, because you could, you just don't want to get started and be 1/10 of an owner of a property. So that's different than saying that I don't have enough money or I can't do this, right? JVing for me is a great place to start. It's not the only way to get in, or it's not the best way to invest in real estate for a lot of people. Like I myself, I own a lot of properties with my brothers and my third brother, I guess you can call him, my business partner. I mean, I see him more than I see my own family. And we own a lot of properties together, but now I'm also shifting towards like, hey, look, I have different life goals, you know. Him and I have made a lot of money together in investing into real estate, and he wants to invest into other types of properties where I'm just like, I'm the lazy investor. Everybody knows that about me. I'm completely the lazy investor. Just let me get a condo, let me not worry about the friggin' down payment and the mortgage for 3 years, buy some time and let it rent out. I don't want to fix anything. Unlike on Anthony Tabar and Austin, I can't even put the shelves up behind me. I had to get our co-host and VP to put that stuff up, right? And so that works for my portfolio. That works for my life. It doesn't make it right for everyone. And what Austin's saying, it doesn't make it make sense for everyone. It might not be right for everyone. You have to figure out what you're comfortable with. I think where a lot of investors make, especially the ones that are starting out, they get the shiny object syndrome, right? Like, I want a BRRRR. I want to invest in new builds. I want to invest in commercial plazas. I want to invest in multiplexes. So you want to do all these things, but then you never actually pull the trigger on one specific strategy. I think if you decide to BRRRR, go BRRRR yourself like crazy for a couple of properties. And when a new build comes your way or a multiplex comes your way, don't touch it, right? Like, and if you want to wholesale, just pull the trigger. I mean, what's your guys' thoughts on that?
Well, another thing that I wanted to point out is that in 2018, you didn't know that Windsor was going to see that growth that it saw. And, you went where you drove to where you can afford, and
you drive till you qualify.
Drive till you qualify.
Drive till you qualify.
Drive till you
Even if
qualify.
it's 4 hours away.
100%.
Yeah. And
Hey, that's where the returns are best, right? Like, in my opinion, right? Is like, if you have to go out of the GTA and you got to go out of Southern Ontario, and that's the only place that you could invest in, there's nothing wrong with that.
And so my question to you, Austin, is what about those millennials or those people who say, oh, I missed the boat, or, I'm not going to see the same growth that Austin saw in Windsor. Windsor always had a stigma to it, and all of a sudden it, was giving people great returns. What would you say to somebody out there who's like, oh, I've missed the boat?
You can always say you missed the boat, right? At any point in time. It's hard to, again, like, it goes back to the point, it's hard to time the market. You just got to buy a good deal that you can't afford now. If you, like, as Jazz saying, if you want to BRRRR it, a BRRRR works in any sort of market, right? You just got to find something within your budget. You
need to say that again. A BRRRR works in every in
any market. Yeah, it really does work in any market, right? It's just more so like, what are your personal goals, and what can you afford? And then you don't, like, as a new investor, you don't have the luxury to choose exactly what you want to do. If you have 40K, you have 40K. You got to make compromises. I made so many compromises. I drove 4 hours. I don't want to drive 4 hours. I'd rather invest in the GTA. But it is what it is, right? Like,
that's amazing.
Yeah, if they can't afford Windsor, if they're like, oh, Windsor's too hot, too expensive, find another market. Go Northern Ontario because it's cheaper, right? Like, it's just, people make excuses for themselves not to take action because it's easier to make excuses than it is to put in the hard work.
I love it. My man, how often do you do your podcast, and where do people find it?
So they can find it on Spotify, Apple, basically every major podcast platform. It's called the Rise Real Estate Investing Podcast, and we release episodes every Thursday.
Love it. So we come out every Wednesday after you hear Jazz Takhar, only because the Wednesdays become Wednesdays before Thursday, not because my podcast is any better than Austin's by any means, just because Wednesdays before Thursday. Thursdays, make sure to go check out the podcast. I always tell investors to check you guys out on Facebook. Am I right by always saying that, buddy? Okay. Mm-hmm. So what's the name on Facebook again?
Rise Network. Very simple.
Mm-hmm. Very, very easy. I love that. Do me a favor, give us a big smile on screen as my team here is putting together the thumbnail. Austin, thank you for your time today. Anthony Tabar, thank you so much for guest co-hosting.
Thank you, Jazz.
I hope we all brought you value to the question on what is wholesaling.
I had more fun than I was expecting.
I don't know.
I'm glad I entertained.
Hey, Austin, I don't know if we take that as a compliment or not.
No, I'm glad I entertained. I hope the expectations were high and it went higher.
No, it's good. I was excited, man. I was honestly, I mean, like I said in the beginning, this industry never ceases to amaze me. I'm always learning. I'm always meeting new people who surprise me and amaze me, man. And honestly, Austin, I'm like, it's good for you. Kudos to you.
Appreciate it, Anthony. Thank you so much, Jazz.
Take care, buddy.
Take care, guys.
All right. Thank you for that, my man. I hope it was fun.
Man, you guys are such great hosts. Very casual, conversational, easy to. It's yeah, like no prep is needed. It's just very easy conversations.
It's funny, Anthony, because Austin's saying what he's saying, and thank you for that. I really do. It really does mean a lot because that's what the team really wants to hear on a regular basis. But Austin was asking me because I was just setting it up for 3 o'clock today, and he's like, "So, dude, like, what do you want me to prep?" Like, Austin and I have done a lot of content together. Mm-hmm. Never a podcast setting. And I'm like, Austin, we're going to have a conversation on the phone like you and I have had tons of times. Well, there is no prep needed. On the flip side, Austin Anthony's asking me yesterday or 2 days ago, Jazz, what do I got to prep? I was like, nothing. Let's just show up and all of us have a conversation. Obviously, Laura, who usually sits in this seat, she's starting her own show. So she's gotten too good for me now. And so Anthony's actually probably in the process about 3-4 weeks away, maybe 3 weeks away of starting the Anthony Tabar 2 cents show. Tabar's 2 cents. And so I don't know, maybe you guys can connect, get Austin on your show.
Oh, I'd love to, man. I'd love to share this share this with my network. Yeah. Cool. Yeah, I showed up today with 30 cue cards. Jazz ripped them up. He threw them in the garbage. He said, "No, you're not using that."
This is not how we do it here. I love it. Organic conversations turn out the best.
I think so, right? I think people get to be a fly on the wall of conversations, and the truth is, Anthony really did. And like, all joking aside, Tabar had no idea what the heck wholesaling was, and so the second he said that, I was like, oh fuck, this is gonna work out awesome because. Yes, Anthony, you're going to learn, but I can teach you that in 2 seconds. I can get you on a call with Austin in 2 minutes. He'll tell you it. At the end of the day, there's somebody who's listening right now who has the same questions, and they got to be a fly on the wall.
Exactly. Yeah. Just general curiosity, because you ask all the right questions as well when you're just like curious about a subject. No, but it was a pleasure. It was a pleasure, guys. Like, this was really fun.
This comes out today is really Thursday, so this comes out this coming Wednesday, buddy. My team will get everything over to you. So it comes out on Wednesday. Expect an email from Carolina, my EA, with the full package and everything. Can you do me a massive favor, Austin? Can you just shoot me a text with the best mailing address for you? Because there's some swag that we always like to send our guests.
Oh, appreciate it. Yeah, absolutely will do. Okay. Shit, my laptop's freezing up. Give me a second.
Take your time.
I can't
just
even
shoot me a text message. I was gonna say, just shoot me a text message with the best mailing address, and my team will send the swag. And then on Thursday, you'll get all the clips, you'll get thumbnails. Share as you please. It would mean the world. And if there's any other guests that you think I should have, always just throw them at me, man.
Absolutely, man. Yeah, I appreciate this. And Jazz, sent out a podcast invite to you. I'm not sure if who's your new EA? Maybe I'll send it to your EA then.
Carolina Medrano.
And she's gonna reach out to me, so I'll just send it to that email.
100%. If you just send it, yeah, she'll be emailing you next Thursday. I think I saw something. I think she booked me to be on your podcast.
Did she?
Yeah. She was asking me. I think there was only Mondays available. I usually don't do Monday nights. I was like, fuck, I'll do anything for Austin.
No, it's not Monday nights. We changed the timing. So if there's a better time, let me know.
I think the link that you gave us is for your calendar, so she'll book it, buddy.
Okay, cool. Sounds good.
Awesome.
All right, guys.
I appreciate you, Austin. Thank you, my man.
Yeah, take care, all. Have a great rest of the day.
Take care, Austin.
Okay, you too. Bye.